Hey, hello everyone, welcome to today's video. It is the 18th of November. I'm Chris with Elevate Cafe. Let's take a look at the markets. Another day of pretty decent volatility in here where the markets were making a new low. And we're going to start by taking a look at the VIX here and then at the indices, and we're going to move on and take a look what's going on in crypto, which is bouncing a little bit. I don't think it's enough, but we're getting small green shoots in there. But we'll take a look. So volatility, as long as volatility index, it is above 17, I must say, it's probably going to be quite hard in here to, or at least in my view, I would not be a player of the market from the long side. So there's a couple of things. VIX is pretty high, and it can reverse at any moment, and that's fine. We're going to let it do that first. But then you also have a market that's below a 50-day moving average. So those two things are what's kind of telling me to stay aside from the market. And if I can find anything on the short side, that's fine. If not, be in pretty heavy cash positions and without looking for trades on the long side. I'm not, in any shape or form looking to secure a low, to find a low, to call a low for that matter. I don't care for any of that. So I'm analyzing the market here, and that's telling me as I'm watching it that it's not a good time to be aggressive. There will be a time to do that, and it might be even a bit late as it looks on the chart, but I'm totally fine with that. So looking at the VIX in here, it's trading at about 2180. We're going to wait for this to kind of start to come back down. Now, looking at the price section in the S&P, and I've talked yesterday about the wave counts, on the weekly time frames, we've broken below that 10-week moving average. This is a pretty serious break. Is the first, I would say, major break of the 50. I mean, you could probably go back here in January, and in here we kind of created an engulfing, and we made a small new high, then we reversed again. It's possible of something like this we're going to watch. So basically, if this week or for next week for that matter, we get some kind of a bullish engulfing or some kind of a hammer from here, that's going to be important on the weekly time frames. But this is the first time we're breaking below this one, and if it's anything like this, then we gotta be cautious in here. If we take a look at the daily time frames, you can see this is the second consecutive day where we're breaking. Today's volume was one of the highest we've had in a while, and while that could be that you could have a small term exhaustion, or let's say downside capitulation or what have you, it's still very far from assuming that a low is in place. Now, as I've said in this channel many times, if this is a three-wave setback and this is an ABC, that means that the market, if it's correct as an ABC, what you're expecting after that is a move to new highs. This could always morph and become a complex correction if any rally up into these levels becomes an X wave. Then you can obviously fell again and continue to decline. That's why this pivot right here at about 6,900 is very important. Now, many of you would say, well, or some of you would say, well, I don't want to wait until, we're going to go all the way up there to initiate long positions because, by that time it's going to be too late. Well, that's the price, that this strategy pays for that luxury of putting the odds in your favor, and you do that by waiting until you're crossing back above the B wave high. Now, you could look at this low and say if you're getting back above this low, I don't know, with 2-3% above this low, one could start to get long. That would be maybe a move back above the 50 and above the 20-day and a close above those levels. That could be considered as another bullish signal, but I would enter only on a small position and then adding on a break of this B wave. So I repeat this in a lot of videos because that's kind of how I like to look at it, and that's how I kind of like to work it out. And what this tells me basically is there is no rush to buy a market that is down here. below this moving, because I've seen plenty of instances where tops get formed just like this, and you're getting a little bit of a rally into the 50-day, and then you start to fall and fall, and then you're breaking further, and then this starts to kind of point lower, and now it offers resistance, and you're in a downtrend before you know it, and you're in a big decline. So if anything, for those that wanted to trade with the downside, thinking that have an edge now that you're below these averages, selling into a 50-day moving average or a 20-day would be the way to go, to be a trend follower and look for downside. Now, I've said that we're still in an uptrend, and for me, it's very important here on the weekly, these levels back here. And as long as these hold, I'm not going to be an aggressive seller of the market. Okay, so from a higher high and higher low perspective, that's important. Now, I want you to also notice something else. Every single when you make a new high, you have new highs in here. You can see, right? And then you kind of pull back, and you have these corrections. Most of the corrections don't go, even this one in here, barely, it was almost right there, right? Don't take the prior swing low. And as is the case with a lot of these in here, you had this big flush, which was maybe the first warning signal that the trend is in trouble, but then you made a new high. But look what happened here, right? This is the first time in a long time that we failed to make a new high, which means that this was somewhat of a warning signal that the trend could start to kind of turn back down. And that's why I said, if the bears have any power in here, this is the place to kind of get aggressive and start to look for the market to the downside. All right, so this is again just another analysis of the S&P 500 and what's happening in here. I mean, the Nasdaq, it's even a bit weaker. The Dow Jones was diverging because as Dow Jones was making this new all-time high, the S&P and the Nasdaq were diverging from price, and it was nothing else than just a failed move to new all-time highs, trying to again just kind of make the bears or the bulls maybe hang on to something still, that the trend is still intact. And look, Dow, it's moving. I was one of those that I was watching this as he was making it as a positive sign. Russell, it's still now it's like pretty deeply below the 50-day moving average, so it's in a heavy decline. I would not be again interested in small caps until we're getting back above 2,500. And then semiconductors, they held this test of the 50-day, and now we're correcting. Now on the weekly time frames, we're still looking fine. Remember, as I was talking in terms of the wave count, that this is a wave one and possible wave two, and I'm still giving you the benefit of the doubt here to be another one and another two. So I don't have this in here, but go ahead and calculate a pullback of this. You want it to be as small as possible, maybe no more than 38.2. Once you get into the 61.8, it could be a little bit too deep for how high we are in this kind of cycle. So you want this to stay fairly short. So if you notice any bullish engulfings out of here and then a move something like that, it could mean that we might continue to go. So Nvidia is tomorrow. It's important what it's coming on the back of a pretty shaky market, and a market that's a bit uneasy. So I even if they have, I think, a great earnings report, which probably they will, the market might not look at it that favorable, just by the fact that we've broken below these averages, and the market looks very jittery with the VIX what it is. So I would take the earnings of Nvidia with a grain of salt, and if anything, if they come somewhat on the softer side, or if not as expected, then it could be that the market could take a bigger leg lower. So very, very important, and I'm going to watch that. Dollar index, it's continuing to kind of gain a little bit of strength, but it still hasn't established itself above the 100 level. So I will watch this. If it gets back above there would be further signs that we could be continuing to correct overall. What else? Let's take a look at. I mean, gold and silver, they're kind of holding steady. Let's go ahead and take a look at Bitcoin and see where we are there. Now, on the weekly time frames here, again, we've broken that key moving average. I already showed you the wave counts. If you haven't seen them, go ahead and visit the video from yesterday and some prior ones I've talked about. Either a wave 2 in progress at about the 61.8, which was at the 90. Around the 90. We just kind of bounced slightly below that. So these are important levels in terms of the fib from this low to this high. If this continues, we would be looking at this as a possible fourth wave that would probably bottom near 75,000. Now, it sounds ugly. It might not happen. I'm not saying it will. So, I'm not making this as a call. I'm just making this as the next obvious level that the market will go to if we're not holding here. And if we're looking at the daily, we're having a fairly decent bounce today. We'll see how we close. It means nothing in the scope of this decline. I don't really. Sorry, I wanted to zoom out. I don't really care a whole lot what the wave count is in here. It could be, an ABCX ABC, and you could be done in terms of a corrective move, and you can turn. It could be a 1 2 1 2 3 4 5 4 and 5, and you continue to decline. There's several ways to look at this, and there's don't think there's one better than the other. I still think we're developing, and it doesn't seem that we have a completion, but here is what's important. It's important the fact that the price is weak and it's below all the key moving averages, and until we recapture some of these swing highs, some of the moving averages, until we're seeing more persistent buying, there is no point in getting aggressive in Bitcoin. From a longer term perspective, I don't have a problem if you dollar cost average. I have no issues with any of that. If you're a long-term holder, I don't have any issues with anything. This is purely based on, let's say, from a swing trading perspective, where you want to catch a move. Let's say from, I don't know, I'm saying from 90 to 120, or from 90 to 110, or something that's a bit more serious, that it's got meat on the bone. And somewhere of 20-30%, if possible, maybe even a bit more. But right now, there is no such signal. Just because there is one day of buying after so many days of selling, it doesn't constitute as a buy signal in my view. So this will have to fight a little bit more in here. And at the minimum, if you can get back above 99, that's 100 above this 20-day moving average. Even if you do that, let's say that you start to climb kind of back into these levels, you will have a test, and it will probably come back, and that's important. If this low holds, it matters kind of how this forms, if it's some kind of a leading diagonal, what have you. So there's just nothing here yet that would suggest to become aggressive. So I will continue to kind of beat that drum. And Ethereum, it's right at this average. So it's looking somewhat better, just because it hasn't really spent that much time below this 50. However, this has been a pretty whippy move in here, so it doesn't have it didn't really have a lot of directional move. You could say that if that's an impulse, you're looking at a corrective move against this impulse, but it needs to move higher first before I would consider doing anything with it. And then XRP, somewhat it's holding better than I expected, but it needs to work more, maybe above 311. I would be back to being a buyer, because I want to buy in an uptrend and with the momentum. So right now, there's not much to do right here in Ethereum. So again, thanks for watching. As always, you'll find me on Discord and Twitter, and here on YouTube with any comments, suggestions, likes, thumbs up, what have you. I'll see you next time. Bye-bye.